Hi, everybody. This is Steve Aul, the Aul Financial Group. Welcoming everybody to the May the 15th Town Hall meeting for the Aul Financial Group. We do have a new presenter on the line with us today. Will Meneses, the newest advisor at the Aul Financial Group, will get his inaugural town hall today. And I just want to basically say that I hope everybody had a happy Mother's Day. And then I hope everybody's looking forward to the Memorial Day weekend. It is early this year. You know, I will remind people that we will not be in the office on that, the Monday of Memorial Day. So please, if you have any questions or you need anything prior to that, please don't hesitate to give us a call. So I am going to turn over the first part of the May 15th Town Hall to Will.
Thank you so much, Steve. Mel, thank you everybody for listening to us. And yes, this is the first time I am going to talk a little bit about everything. A really powerful 2 months since I got hired by Steve and being part of Aul Financial Group and being part of this great group that they welcomed me since day one. And one of the things I have seen and I feel really identified is my perspective and my point of view as a son, seeing my parents going through retirement. They're actually in this age, between 60 and 64, ready to jump into it, and being part of all these meetings, chatting Steve, sharing Mel, getting ready to help clients in the next month, and seeing these kind of roller coaster of emotions, right? Should we get into retirement? Should I keep working? What should I do right now? And one of these little experiments I did was ask the same things to my parents. Like, you save a lot of money. What are you going to do right now? When are you thinking to retire? A lot of clients know that I am from Peru. And I will tell you, my granddad, he worked until he was 87. He was a taxi driver. So I don't want that for my parents. So that will be the question I asked them. When will be the time to retire for you guys? And they didn't have any idea. They didn't know if the time was right. They didn't know if the amount of money that they have saved right now was enough to go and make the jump. And I saw it every single time when people came, sometimes like, can I retire? And I remember Mel's like, you could retire yesterday if you want to. So that's what we do. That's this great thing about planning and helping. And in one of my trainings with a firm, this phrase, whatever we do is methodical, mathematical, and non-emotional. So that's what we do for our clients, trying to set emotions on the side and think about what can we do to help you to reach in that moment to decide, I want to retire. I want to retire right now. And you'll be able to do it without any pressure, without any fear. Well, fear always will be there, right? But allow us to help you through that process, which a lot of people outside of us, I think they don't focus on that. And I feel identified. I feel every time I see my parents, that's what I want for my parents. I want to plan something for them. I don't want them to work until they're 87 and 86, right? So that's my point of view as a son, trying to help my parents to make that jump and see if it is enough. Probably it is, probably it's not, but we will do as much as we can to be able to help you to see if it is the right moment or not. And we're honest. Sometimes, like, you know, you maybe you can't retire in a couple months or in 2 years, or you could retire years ago, but you don't want to. But that's what we do. And again, I feel so grateful to be here, and I feel identified about this firm and these people, because that's what I want for my parents, and I bet a lot of your kids, they want the same for you.
Thank you very much, Will. I do appreciate it coming in. Will's been with us for about 2.5 months now. And I believe he's ready to actually sit down and talk with the clients, because I think his thought process is where it needs to be. And I'll talk a little bit more later about the idea of how my parents affected me in this industry. So thank you very much. I appreciate that. Now I'm going to turn the microphone on over to Mel.
Good afternoon. I appreciate it. And a lot of sentiments that Will is talking about ring true. My parents' situation is a little bit different. They intended to spend their last dollar and write a bad check right before the coffin lid was screwed on, and they were successful. There wasn't any leftovers, and they were okay up until the end of their life based on the lifestyle they had, but there was no residual effect, and that was fine with everybody. My subject today is about the difference between this firm and most others, and Will has talked about this from his relationships at Bank of America and Merrill Lynch, and then coming here as opposed. And this is something that was hit home to me actually quite a bit. I'm going to use a hypothetical case and kind of put several different things together as if it were one potential client. I had a conversation with a client about they had long-term care insurance, and we were looking at annuities, we were looking at investments, we were looking at cash flow, we were looking at taxes. Their concern was they just got another raise in price on their long-term care insurance, and the question was, well, should I keep it? Should I reduce it? Do I need it at all? And this is someone who is not a client. This is someone who's thinking about coming on as a client. And I looked at their plan and their program and recommended that they hang on to that long-term care insurance, because it was really quite a good one and fairly reasonably priced, even with the increases. And if they need it, and quite honestly, the likelihood of them and their particular health issues is pretty strong that one of them will need this coverage at some point. One of them, using the long-term care for 1 year, will get paid back more money than they've paid in premiums for a 10-year period. Okay, and they've had it for a little bit longer than that. So it literally, if either one of them go to the use long-term care and turn on this feature for home care, assisted living, or nursing home care for as much as a year and a half, they'll get back more money than they ever paid into the program. So my recommendation then was to keep that policy. We didn't sell it. We didn't say get rid of yours and come buy mine. We simply gave them advice based on how that product fit in with their entire plan. And there's no compensation to us for that. The second thing we looked at is they have multiple life insurance policies, and we didn't sell them. And I'm not recommending they get rid of them, because they need to keep those policies in place, but they're underutilizing the value of those policies. There's ways they can create cash flow for themselves or use that money to use for other things. So it's underutilized asset, which we have nothing to do with, other than if they hire us to be their advisors, we're going to tell them the best way to use that product. When it comes down to, they'd already started their Social Security, and we talked about that quite a bit. And about what happened. He's very, very concerned about what's going to happen in 10 years with Social Security. So we looked at other ways to offset the potential loss of Social Security if Congress changes those rules. And we looked at using certain products or investment portfolios that will generate dividends or income or interest that will offset the loss of that Social Security. The other thing we looked at was estate planning. They have one child that's doing fantastic and multiple degrees, and they're doing great on financial, and the other really has an issue. And let's see, I believe the exact quote from this particular imaginary client was, if you want to help that child, you'll have to adopt him. So not so good with the managing the monies and things of that nature. But then we talked about doing legacy planning, where certain types of legal structures can be set up to hold assets and help that person who's not good at handling money manage their money throughout their lifetime. So far, everything we've talked about makes us nothing. There's no profit to us one way or the other about any of these things. This is called planning. And planning is a very, very large part of what we do at this firm. Now, they were comparing our performance in the investment portfolios to where they are currently, and it was very commensurate. It was pretty much the same. Not well, I don't have anything, oh, I'm going to beat that guy, we'll get you a better rate, or we blah, blah, blah. It's pretty much the same. Their stock portfolio, our stock portfolio, very much commensurate, as I said, over time. The difference is we were looking to take part of that money and protect it from market volatility, whereas the other firm said, no, that's a bad idea. Well, it's not their money. And if they have concerns about potential losses, then the idea about investing shouldn't hold a whole lot of water compared to the client's ability to accept risk and loss. So, but what it came down to was, if we were managing the money, even if we managed it the exact same way the other firm was, and our fee was essentially the same as the other firm, what do you get that's different? Well, I just named off a whole list of things that we help our potential clients with when they're a part of our firm, because we don't look at just the investment. We're looking at the safety, do you have your legal documents in place? When should you take Social Security? Can you retire, as Will was saying earlier? All these things are built around making a plan, and then that plan has to be adjusted on a regular basis, because one of my favorite sayings lately is life happens. You can have all the plans you want, and let's see what, there's a great saying, man plans and God laughs. Okay, so sometimes things happen, life happens. So you have to be prepared to adjust and make corrections, or sometimes an entire stream changes. We've had people that have sat down with us, they've become a client. We have a 2-year plan, a 5-year plan, a 30-year plan, and oh, gee whiz, I got laid off early. Or, my kid's got a problem, I got to bail them out and I need to come up with this money. Or I had intended to do this investment, but it collapsed and now that money's not going to be there. Life happens. So you have to be able to have a plan that will withstand all these different scenarios. And it has a lot more to do with planning than it does which stocks, bonds, and mutual funds you happen to be invested in and what your rate of return was last year. So my thought process is that when you're looking for an advisor, the advisor should be willing to do planning for you as a part of the structure. Our fee is exactly the same as the other guys. Our performance is pretty much the same as the other guy. So why switch? Why come here? Why go to people like us? So because that whole planning process is not a norm in most firms. It's not what they do. They do money management, or they sell you insurance products. And we do those things too, but it's all built around a plan and then maintaining that plan. So be sure that if you're looking for an advisor, that you're getting a real planning situation and not just a let us manage your money. It's a big difference.
Thank you very much, Mel. We appreciate that, and we'll go from there. Now, I'm going to circle almost all of this together, because when I was out there, I still remember when my mom was diagnosed with Alzheimer's. And my parents had gone to, quote, salespeople their entire life, and they had never gone to a planner. And my parents' long-term care plan was the same as some of the people that are listening to this call. Because people are shocked when I say it, everybody out there has a long-term care plan. And when I say that in a big group setting, I could see the people in the audience that their eyes kind of drop. I don't have a plan. And I say, yeah, you do. You have the exact same one my parents had. What asset are we going to sell to keep mom in the nursing home? And that's what I challenge the people when they start to look at long-term care exposures. Go home tonight, open up your portfolio, and circle the asset you will sell first. Because that was what I had to do with my parents. And then I looked at it and I said, Steve, you're helping people in the business world, but you're not helping people like your parents. What's wrong with you? And then I agree with what's been said. It's funny that we don't plan on what we're going to talk about in these events, and it all came circled around to the same thing. Let's build a plan and then figure out what product needs to go into the plan versus which product do we need to move and or sell. And I think that's the most important thing that we can talk about is build the plan, and then the plan around a lot of it is a very important aspect. Because I don't know about you all, but we have a 24-hour news cycle right now. I remember the days when Walter Cronkite used to get on and he would read the news and we would get to interpret what he meant by it. Whereas now, there's 24-hour news cycle. If I'm ultra conservative, I can find a station that's all they're going to play. If I'm ultra liberal, I can find a station they're going to play. And I will hear exactly what I want to hear. And there's a lot of noise going on out there around the market right now. The market's up, the market's down. I always prefer to do a town hall on the date in which the market's up versus the days in which the market's down. So it does make it a lot better today. Nobody liked the month of April, but nobody's really complaining right now about the month of May, but we're only halfway through it. So we do hear a lot of different things. And there were a lot of different ideas out there. I had somebody talk to me earlier this week and they asked about, Steve, what do you think of that, sell in May and go away? What about the dogs of the Dow and some of these investment philosophies and thought processes that have been used over the years? And I just kind of sat with them. I said, I do the dogs of the Dow. You're just basically saying, I'm going to buy the things that are not doing very well at this time. But sell in May and go away was built a lot around the fact that teachers only got paid so many months out of the year. And so those summer months, they weren't taking any money out of their paychecks to put them into the 403Bs and the retirement plans. So there were less buyers at that time. Well, that's not as true today as it used to be. And that's when I start to look at investment philosophies. That's what I've loved about going Brad Jenkins and Market Guard. I'd known Brad for a long time. I watched Brad when the markets were up, but I wanted to see what Brad was going to do when the markets were down. And then I looked at his proprietary processes, mathematical, non-emotional. Those are the most important things that we have in it that answer the major three questions that most people, when I talk to them today, ask. Steve, do you think now is the time to hold on to where you're at? Sell where you're at? And if I've already sold, is it time to buy back in? And I think taking the emotions out of that is the greatest thing that we could possibly do. I get to do reviews on a regular basis all week long. I like the fact that when we come people in, some people say, well, I've got a more aggressive portfolio and it doesn't have as many equities in it right now. I said the models are currently looking at the fact that because of the headwinds that we currently have out there, election, geopolitical, the Federal Reserve, what are they going to say next week that might make the market go up or market go down? When are they going to actually react and either raise or lower the things? We've got all those things going on there. So there's quite a few headwinds coming out right now. So the target models are not 100% invested right now. So if you're one of those people that are sitting out there and you're going, I don't know whether to get back in or I don't know whether to get back out. Let's take some of those emotions out of it and look at a process that does that for you. And that's what I said. I've got aggressive clients, they stay completely aggressive. My more conservative clients will back away from that market when we have times like now. So I'm just going to say, if you're in that category and you're unsure what's going on, give us a call. Clients, like I said, come in. Why am I this way? And then you say, do you think there's a little political headwinds going on right now? And they say, yes. I said, that's why they've backed away, because I like the fact to try to remove the emotions from the investment. Why? Because I think emotions are the things that probably drive the returns down the most, because people look at it and the average individual will usually, instead of buy low, sell high, they buy high, sell low, waiting for those markets to return. Over the long haul, my guess is 10 years from now, we're not going to have a clue what happened in May of 2024. So let's look at this, and if our goals are for the long haul, and that's why I agree with everything that's been said today. Planning is the most important thing. Why? Because when the noise starts to hit, if I'll focus on the plan, I can hopefully let some of those emotions come down. We've had a great week this week. We had our client appreciation event where those that have referred people or they've referred people or they were our new clients. We get together on a new client appreciation. So we had that earlier this week. We are going to have a cooking class. I'm going to try to share a screen. So we've got a couple events that are coming up here in the end of May. We have the 21st and the 23rd. It's going to be taxes and retirement. It's out at Stone Summit in Wentzville. You do need to call and make a reservation in the office. If you're not a client, you do need to qualify to come to it. And then in June, on the 18th and the 20th, at Fleming's Restaurant in Frontenac Plaza, we're going to do retirement roadblocks again. If these things sound like they would be a good idea for you, please give us a call. If you would like to get on our mailing list, just call the office and say you'd like to get the weekly market update. What it does is it talks about what's going on in the markets. It talks about Stacy's recipe. It's going to have Mel's joke. It's going to have Mel's joke, and I usually put a quote in there every week. And it does tell people what's going on at the Aul Financial Group. So if we do that, like I said, we talk to the people at the client appreciation event, that we like doing business with people like our clients, and it's always great to welcome new members to the family of the Aul Financial Group. And I want to thank you all for being a part of our family.